Hey guys, I'm Kenya Horton, and in this video, I'm going to talk to you about breakout trading. I absolutely love breakout trading. I feel that it's very, very easy to spot and it's easy to know when you're wrong. So I'm going to walk you through a trade idea and show you what I do from start to a finish, how I identify a breakout. I'm going to show you how I determine my entry, how I determine my exit, also some things to be aware of when you're trading a breakout. And so if you guys have any questions, comments, make sure that you drop them on the comments of this video. Give us a thumbs up, a like, let us know how you like it. Hopefully this helps you. I really try to share everything that works for us, Brian as well too. So let's go ahead and dig in. I'm actually going to share my screen with you and I'm going to show you an example of something that I shared in our public Telegram. The link to our public Telegram is in the description of this video, and welcome to join us. Usually I will drop trade ideas inside of our Telegram with the 4-rule scalping strategy that we use, as well as breakout trading. So this is an example trade that we did on AUD CAD, and I'm going to walk you through exactly how we identified this trade and just how you want to identify breakout trading. Now, what is breakout trading? Breakout trading is basically when price breaks out of consolidation, we call it congestion, a trading range. And how that builds up is usually, if you notice, after maybe London or New York session where you have high volatility trading happening. And let's say, for example, if there was a strong push up where buyers had a lot of buying power and then sellers had a lot of buying power maybe to the downside, there's a period where you notice during market hours where price kind of stalls. And you'll notice that during that stall period, that patterns start to form. That's where we get our bullish flag, our bearish flag, and these different patterns start to form, and we plan for the next trading session. We're doing congestion or doing that consolidation, also we call it build up. That's where we start planning our next move, our next plan of action when price breaks out of that congestion period. So we are looking for basically an opportunity to catch that next directional move. So if we think price is going to go bullish, then we want to catch that bullish breakout. If we think it's going to be bearish, we want to catch that bearish breakout. So this is just an example. I also incorporate the MACD when I do breakout trading. Now, there are traders who have different types of technical analysis tools that they use. You don't have to use the MACD. You totally can, do what works for you. So I'm going to walk you through an actual example, and I'm just going to show you from start to finish how I plan my breakout trades. And yeah, I hope it works for you too. So let's look at AuCAD. The first thing that I do is I go to the weekly time frame. And so I'm actually using TradingView, and I like to start on the weekly time frame because I like to get just a good big overall picture of how the market has been trending. What is it doing? Are we in an uptrend? Are we in a downtrend? Or is the market ranging? And when you look at AuCAD on the weekly time frame, you're going to see here that price has pretty much been in a range. It's not, we don't really have a strong move to the upside or a strong move to the downside. We can see previously that price was going in an uptrend, and then it reversed and started making its way down, and then lately it's just been in a range. So you can see here where my crosshair is, this range is kind of just sideways movement, right? But in between that sideways movement, price is still moving up and down, because that's what price does. So after I get a good feel of the direction of the market and which way it's going, I then drop down to the daily time frame and I mark my key major reversal zones. All right, so you can call it support, resistance. We all traders have our own names, but those most common names you're going to hear are your support and resistance, your major reversal zones. And when I look at support and resistance, I don't really look at it as a line. I more so look at it as a zone, okay, where price has made a directional move and where that price level is respected by buyers and sellers. And when I say respected, meaning that price has targeted that area several times. So what I do on the daily chart is I like to turn my chart from a candle chart to a line chart. So if you just click on that, it's going to give you a list of options. You click on line. And on my line chart, when I mark support and resistance, I am not just putting lines anywhere because I'm just putting lines on my chart. My lines are placed wherever I put them because I plan to make a decision when price moves into that zone, okay? And also, I want to mark those key levels, for example, so that if price is breached at a major support or resistance area, then I know exactly how I want to take action, or if I'm in that trade, if I need to cut my losses, or, you know, my stop loss should be set anyway. But just giving you examples of how you would use these levels. So you'll see that I have, usually what I do is I put two levels above price and two below price. That's just how I like to do it. And when you mark them on the daily time frame, it's going to look a bit different when you zoom down to a lower time frame. So you might have to adjust it just a little bit, but you don't want to mark a line everywhere. You want to get these major reversal zone areas where price really tested, or it held that level, or it breached and then returned to that level, a strong area where you had a period of strong support, which became resistance, and basically price is respecting that area. So if you see here, this top line that I just dropped here, you'll see that price basically tested this area 1, 2, 3, 4, 5, 6, 7, 8, 9 to 10 times, okay? So versus somewhere else where you might see about 1 to 2 touches. So this is a very strong area, and all I do is I look for an area where price has bounced off of the line multiple times. So that tells me that this is a significant area in the market. For some reason, buyers and sellers love to return to this area and are making decisions at this level. So once I put my price targets on there, and I feel that, okay, I have enough support and resistance areas to help me plan my next move, then I will go ahead and I will turn this to a candle chart. And as you can see here, if you just look at my chart, you'll see that the lines that I have marked, price is pretty much respecting those areas. You see that? Price is pretty much in that area. Let me move, hold on, let me get rid of this. And then let me move this back over. So you'll see that price is pretty much respecting these zones, right? So then what I'm looking for in a breakout, let's say, for example, like right now it's 2:49 p.m. my time. I don't really trade the Asian session. You can, but I love the London and the New York session for breakout trading. In my opinion, that's the best times to trade a breakout, but you can also trade breakouts in the Asian session. You just want to make sure you're trading the right pairs. So basically what you want to do, for example, what I like to do, there's several ways you can trade a breakout. Now, you can trade a breakout of swing highs and swing lows, or you can just trade a breakout of support and resistance. So you see, for example, I'll give you an example. Let me turn my phone off. I'll give you an example of trading support and resistance, for example. So let's say I'm just going to give you an example really quick. Let's say we put a level here, okay? So there's different ways you can trade support and resistance. Let's say here, right here, you see where this was a previous area of support, right? And you see how price tested and it tested and it tested, and then it finally broke through with this strong red candle here. So that would be considered a bearish breakout there, all right? So that's a level or an example of trading support and resistance. You can also trade swing highs and swing lows. So what I mean by that, for example, is that if I go down to the 1 hour time frame, I'm going to show you exactly how we approached AUD CAD. So after we added in our levels, what I did was I looked at the direction of price, and I also noticed that there was strong price rejection in a particular zone. So let me show you exactly what I mean by that. So this pair has moved quite a bit, so you'll just have to bear with what I'm telling you now and kind of ignore some of the price movement that took place already. But basically, what I saw here was that price had a slight uptrend at the time on this 1 hour time frame. So what I did was I took a trend line, okay? Because basically I'm seeing higher highs, all right? So I have a high here, and then the market is just creating higher highs. So if I have an uptrend, then I'm looking to see how long this trend is gonna last. Also, too, what I noticed was at this level that I created up here, that we had some rejection going on, all right? So let me make this a little bit bigger. So you have some price rejection going on here. So you see these wicks, and you see how price basically had tested this area, failed to break, and then it broke, but then tested to the next zone up and then continued bearish on the way down. So you'll see where that happened there, and then price continued. So notice what happened when price broke to the downside, I had this trend line created. So this is the breakout that I was looking for. Once I put this trend line here, I set an alert on TradingView, or I also use Call Levels app, and I put my alert at 94.60, which was actually about right here or so, almost there in that zone area. So at about 94.60, I wanted a heads up so that I could see if price was heading to break this trend line, all right? Now I use the MACD as well too as a confirmation. So I love the MACD as a confirmation with breakouts, and I'll show you exactly how I use it. So as you can see here, when price started to break to the downside, had price rejection here, we hadn't yet crossed this trend line, but when it did start to cross the trend line, you also had the MACD cross. Your red signal line crossed over your blue, and price continued to drop. And you'll see it even better on the 15-minute time frame. So when you drop down, what I normally do is when I get that break, I then jump down to the 15-minute time frame, and that's where I start to look for my entry. So the one thing that you want to make sure that you do with breakouts is you're going to have more of an advantage when you're trading with the trend. You definitely want to make sure you're trading with the trend, because you're going to have more, you're going to have you know, a more favorable trade if you're trading with the trend. It puts you in a more favorable position. So when price broke, I had a MACD cross, and anytime your MACD signals are below the histogram, that confirms your downtrend, okay? So we caught this entire move right here as a team, and that was about 31 pips for us this morning on this trade. And then you'll notice, remember when I said that when we have buildup, price starts to form these patterns, you have a bearish pattern forming here. So we expect that if price is resting here at the bottom of the range, that it'll most likely continue to the downside, and we hope for it to hit this target. Now, why these are my take profit levels, remember, that I created on the higher time frames. So look how price respected these levels. You see previously in the past what happened. This is why we always look left for clues. The market will tell you so many things when you look left, and it'll give you so many clues of what has already happened. So that's how we come up with these levels. That's how we come up with our take profit levels. We look to see what has price done in the past. What are the levels that price respected where it possibly can return? And then some traders will, you know, trade particular patterns that give them clues of where price may go. So now that we have a bearish flag forming on the 15-minute time frame, these patterns form on every time frame. You can trade a breakout really on any time frame. I always jump down to the lower time frame for my entry, and then basically how I plan my exit is I take profit at these zones. Now, a lot of you know that I am like a queen at trading pullbacks, and I do that with the IMO web analyzer, which I just learned how to do. And it's phenomenal. I absolutely love it. With breakout trading, I trade that a little bit different because I'm really capitalizing off of the initial momentum of that directional move. So this strong impulse down, as you can see. So usually you can plan how you want to do that based on your own risk management plan. But how I plan my entry is I usually wait for the candle to close outside of the trend line and form a second candle going in the directional move, and then I will enter the trade. I like for my stop loss to be very minimal. So if I'm wrong, I'm okay with taking a short loss. Some people will drop their stop loss on the other side of the channel. If you're trading a channel or if you're trading a flag, I like to drop my stop loss above the previous high or low. So in this case, if you look here, I just really drop it on the other side of the trend line, a few pips above the previous high. It usually works out to be about no more than 6 to 8 pips for me. Ideally, I don't like to really be over 6 pips for a stop loss when I'm trading breakouts. That's me personally. If I get stopped out, I'm okay with being wrong. And usually what I do is I just reassess my entry. If I miss the move or if it's a failed breakout, then I just wait for the next setup. So that's how I do it. You'll see here that we have a flag forming, like I said, and it's not always 100%, guys. When you trade breakouts and when you trade patterns, it's not 100% that it's going to go your way. So get comfortable with taking those really small losses when you have to, and it'll just make your trading so much better, okay? So that's how basically I trade a breakout. In the next video, we're going to talk about failed breakouts, but just remember, ideally, you want to trade with the trend. So right now, we're in a downtrend, right? Our MACD also confirms that being below the signal line here, below the histogram. And so we're looking for price to continue to the downside, but it can do anything, right? But we want to capitalize on that next move. So what I simply would do is for the next session, I still would be watching this. Now, when you enter, you basically would take profit at this zone here. Your next take profit would be at this next zone here, or you can take profit wherever you want, whatever, you know, makes you comfortable, that's what you can do. But what I recommend you not do is when you see a strong impulse down or up in the market, you don't want to say, "Ooh, let me get in the market because price is moving so fast to the downside and I'm going to miss out." If you were to enter here, for example, logically, where would you place your stop loss? Your stop would be pretty wide, okay? So you want to trade with the trend, but you also want to trade near a level of structure. And what I mean by that is, remember, you can trade swing highs, swing lows, you can trade a level of support, resistance, but you want to trade close to structure where the market has made previous highs, lows, a structure was validated, and now we're taking advantage of that move. So for example, let's say we have our trend line here, right? And we have a very strong reversal area here where price pretty much broke this level and through the trend line. So logically, if we were to enter right here at the break, we would want to place our stop loss above a previous high just in case we're wrong. That way we have we're not really risking a lot. So that's the whole idea behind that. That's how I plan my exit, and that's how I control my risk. And I showed you how I also enter into a breakout trade, how I created these zones, how I use the MACD. And then in the next video, we'll talk about failed breakouts. So basically, if you wanted to catch, let's say for the next session, you're looking to trade the next breakout, you simply can just draw your line here because you have a flag forming here on the 15-minute. So you could plot just a line right here. And like, let's say you missed the previous move, you can just plot a line there. And then all you would do is you grab your crosshair, and we already know that we're still in a downtrend. You can plan your alert for about 94.38. So if price continues to break to the downside, it would give you an alert. You would take profit at this next zone, or you can do that however you want. The market is going to constantly pull back. So what I sometimes do is, not with breakout so much with the 4 rules I do, but I normally will enter 2 positions. I'll take profit at like 6 pips, and then I will re-enter 2 more positions when the market pulls back to my initial entry or halfway to my entry. With breakouts, I don't really do that too much because I'm really just looking to capitalize off of that impulse, that strong impulse to whatever side price is breaking out to. So that is how I trade breakouts. Hopefully that was clear for you guys, and I hope that this was helpful. Just remember that you definitely want to control your risks. You don't want to have a very wide stop loss. You don't want to risk like 40, 50 pips. In my opinion, there are some people who might do, but I like to minimize my risk. And I like with breakouts, you can do that because it's easy to figure out when you're wrong. And also, too, you want to trade close to structure. Definitely trade close to structure so that you can have that small risk. And then 3, just make sure that when you're identifying, you know, these congestion periods, very easy to spot, you guys. Just make sure that you identify the direction of the trend. And if you know how to draw trend lines, a lot of us use the bounce back strategy. This is basically part of the bounce back strategy, but also too, just trading any type of breakout. If you know how to draw trend lines or just draw your lines identifying support and resistance, you can find the breakout of prices. So for example, let's even look here. You see how you have this strong impulsive move up. But remember, you see this key level I had marked? Without me even seeing that this happened in the past, I was just able to look left to see part of what happened and look how price pushed through this level in the past, right? But here, it was pretty much kind of floating and had a period of congestion like I talked about. And then when price broke out, it broke to the upside. So if you know how to just draw these zones and also your trend lines, and then have some other form of confirmation like MACD, for example. Look at here when you had that strong impulsive move up. Once price did break out, your blue signal line crossed over your red signal line and it was above the histogram, which is exactly what you want. So all you do is, you know, you plan your take profit from zone to zone. I would say about 20 pips, 15 to 20 pips from zone to zone is pretty, I would say, common of what I see. If you're wondering, well, how many pips should I do? You can see here that I have this level here, but it didn't quite reach here. So sometimes I will bring it down just a little bit or plan my take profit right below. I don't plan it right at the wick. I'll do it a little bit, few pips below. All right, guys. So hopefully that kind of explains how to trade breakout trading, what to be aware of. When to catch breakouts. You want to catch them in high volatility sessions where there's a lot of buyers and sellers in the market. You don't really want to trade a breakout once volatility has died down. You can take profit once volatility starts to slow down. You can take profit, and Or, after your trade, you're about 10 to 12 pips in profit. You can move your stop loss 1 pip past your entry. So let's say if we were in this bearish move here, if you entered at 94.55, and let's say the trade went 15 pips in profit, you'd move your stop loss to 94.54. So that way, if price suddenly reversed to the upside, it would stop you out with 1 pip in profit. So as you gain more profit, you can just trail your stop loss, keep moving up your stop loss, or you can not get greedy and just take profit and be ready for the next session and the next setup. All right. So comment on this video, give me a thumbs up. I hope that this was very helpful for you. We'll see you in the next training.